Why your stop loss failed. Price touched your level, but that's not the price that triggers your order. Let me explain. First, let's clarify what you're looking at. What you see on the chart is the last price, the most recent executed trade. But orders don't execute just because the candle touches your level. Orders execute in the order book. This is where real buyers and real sellers place their prices. Bid is the highest price buyers are offering. Ask is the lowest price sellers are requesting. Execution always happens between bid and ask. The spread is the gap between bid and ask. Ask is usually slightly higher than bid. That gap is normal. Here's the rule that explains most complaints. If you're in a long, you close by selling at the bid price. So long stop loss and take profit trigger when bid reaches your level. If you're in a short, you close by buying at the ask price. So short orders trigger when ask reaches your level. Example, you set a long stop loss at 80,000. Price dropped to 80,000 on the chart, but your position didn't close. Because to close a long, you sell at bid. If bid is still 79,995, the order won't execute. The same logic applies to short. You close a short at the ask price. So if you think your stop loss failed, check this. For long, did the bid reach your level? For short, did the ask reach your level? And always remember the spread. In most cases, that's the full explanation. If you don't want your stop loss to fail again, learn how execution really works. Subscribe to Margex and explore our full trading education series.